Alright, good day to end the month. Last trading day of January, plus 7,700 on the live trades. Underperformed a little bit on extra slippage. 50K portfolio, 2 micros. The micros had 1 extra trade on tick count trend to make it come closer to the hypotheticals. There's a little bit extra slippage today, and so we're up 28,700 on the month in live trading, and no drawdown, no end of day drawdown because we are at equity peaks once again. We are at equity peaks 4 out of the last 5 days. We were at equity peaks on Thursday, or actually Wednesday, Friday, Monday, and then that was yesterday. Today's entry will be plus around 8K on the hypotheticals, and that will be 4 out of 5 days in a row at equity peaks. Also, what I'm seeing here, similar to last month, not a lot of gains going at the beginning of the month. Just going through this extended drawdown at the beginning of the month, and then the gains start to come in here at the end of the month. And same as last month, same thing last month. 1, 2, 3, 4 out of 6 of the last days were at equity peaks, and then there was a choppy beginning to the month. And if you go back and look at the portfolio calculator, these strategies tend to have a choppy beginning to the month. Additionally, there's FOMC and lots of news out tomorrow. So I want to show you our FOMC indicator. And in the past, it's paid to trade on FOMC. With the current set of strategies, I was taking a look at this today, and I had to update the latest date to December the 14th was the last FOMC date. But when you add this 1 here, it doesn't trade on FOMC. It zeroes out those FOMC days, and this goes up from 69.29 to 69.79. This drops by $400, a worst case drawdown. And so in last year, it was more profitable by $20,000 on this setup on the year. If you go down here, take a look, 554,445, and then let's put this into a 1 here, and you get 575,000, so a little bit better than $20,000 last year. If you don't trade on FOMC, so based on FOMC tomorrow and based on the choppiness that we're seeing at the beginning of the months, most months in 2022 were very choppy at the beginning. We're going to skip FOMC. We're going to wait for a drawdown. Looks like there is ADP tomorrow, which has to do with payroll, JOLTS, ISM, PSI, and so then we have crude oil, ISM, PMI, we have crude oil inventories tomorrow, and so then we have FOMC, and then we have earnings after the bell. And so it could go one way or the other. It could be a profitable day for the signals, but based on 4 out of 5 days in a row being at equity peaks, that's one reason is this. 4 out of 5 days, we typically see a cycle. Number 2, the beginning of the month, choppy cycle, beginning of month. And number 3, FOMC. So there's really 3 reasons not to trade tomorrow that I listed right here. FOMC along with all of these economic reports coming out tomorrow. So we're going to pause here, wait for a drawdown, wait for a losing streak. It's been a nice run up into the month, over 10% on the month, and so good gains. As we close the month of January, we start February trading tomorrow. We will sit on the sidelines, enjoy FOMC without trading it, and there'll be the announcement at 2 p.m. Eastern time, and then the press conference usually starts at 2:30 and goes probably for about 30. There's a statement and then a Q&A, and so till 3:15, and then the market closes at 4. So I want to go over the trades on the day. I wanted to be very clear on why we're not trading tomorrow as well. The trade of the day was Cobra CT3, and you can see I also tested some end of day. I've done some end of day portfolio trailing stop losses. Hated to see this when it was happening, and then the market just surged. And so we tend to remember days like Friday where we gave back a few $1,000s here into the close. But then on a day like today, if you have that trailing stop loss, you just want to, part of you just wants to get out and preserve profits on this way down, and then you just miss this. And so, you're up here about almost $7,000 in gains, and you go back down to plus $2,000 in gains because you have your biggest position here at the end of the day, and then it surges here, and you get almost 8K in gains. And so that's how markets move. We tend to remember the times where it sold off and it didn't bounce back, and forget about the times and it reverses. And so when I tested trailing stop loss on this, so far I haven't found anything that works better than not using a trailing stop loss. But I'll continue to research those portfolio combined portfolio trailing stop losses and stop losses. Cobra 3, by the way, this was at an equity peak today. Cobra 3 up on the day, hit its profit target. It came really close here, and then it pulled back. A lot of trades we're seeing comes close to its profit target, then it pulls back, and then it surges. And so if you're watching it closely, these pullbacks can tend to make you nervous, I guess, if you let it. And then Tick Wave went with this as well, up on the day here, and then it looks like it's going to roll over. Quick pullback like this. End of the day, you think, oh, it's going to give it all back, and then boom, it surges into the close. And so Tick Fader lost on the day, lost on the short side, so 3 for 4 on the S&P. And then we had Viper, which is near equity peaks, tick count trend. This was up on the day. This was around break even on the day. One winner, one loser. Cobra 3 hit equity peaks here on Cobra 3 NASDAQ. You can see this performance summary right here at equity peaks. Tick Reversal 2023 had this short yesterday, long today, up at equity peaks. Tick Reversal NASDAQ hit equity peaks there. EVP1 had a nice winner at the end of the day. This is one of the strategies that I've favored going into the month, and it's been a doozy. We're up on the month in our portfolio. We started trading this one at the beginning of the month, just this strategy, and only had a couple of trades, but it has not had a lot of follow-through. There's not been a lot of momentum on the long side. There's been a steady uptrend, but the momentum moves get pulled back before, this is more of a pullback by the pullback than by momentum type of market this month. And so EVP1, my one favorite strategy coming into the month that we just started trading while waiting for a drawdown, was down on the month. And so we were up on the month though because we phased into the portfolio and it did well. Momentum reversal, lost on the day. It's one of those strategies that's the least correlated, one of the least correlated strategies with our others. And so it tried to take short trades, lost two times. And then Tick Pulse, it was, this is Tick Pulse, so it's kind of around break even lately, and you can see that. There's also been an adjustment on our, you had a loser and then a winner, so it captured that in the end of the day. So go back here to January the 6th. I was updating my portfolio calculator yesterday, and I had this trade right here show up differently. So I'm going to be double checking the portfolio calculator. Either way, we are up on the month at equity peaks because we started in a drawdown. We are ahead of the hypotheticals. We have 4 strategies that are at equity peaks today. Cobra 3, Tick Reversal 2023, Tick Reversal, and Cobra CT3. And we are pausing trade tomorrow for FOMC. Those are the trades for the day and the month on the last trading day, January the 31st, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.